So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I am joined today by Gary Lipsky. Gary founded Break of Day Capital at the end of 2016 with a mission to positively impact the lives of their investors and the communities in which they invest through the highest level of transparency and fiduciary responsibility. Break of Day Capital focuses on value-add multifamily opportunities in just a few markets, particularly Tucson, which has led to thousands of data points to make more informed decisions and great broker relationships. Break of Day Capital currently has 98 million in assets under management. Gary is the host of the Real Estate Asset Management Podcast, where he speaks with various experts in the real estate industry to help educate asset managers. Gary also is the best-selling author of Best in Class and founder of the Asset Management Summit. Gary, welcome to the show.
Yeah, thanks for having me.
Absolutely. Very excited for today's conversation. Had an awesome off-camera conversation. Finally figured out where I know him from, and he spoke at IRREC in January, which is Hunter Thompson's conference in LA, which we were talking about how it was 70 degrees in January and probably about 30 here in Salt Lake. So I finally understand why people live out there, despite my differences in a lot of the political landscape out there. But anyways, tangent. Gary, welcome. We're grateful to have you. Take us to the beginning, though. Were you always in real estate? What were you doing before, and what led you to where you're at?
You know, I've always had that entrepreneurial mindset, but man, I wish my parents, my grandparents talked to me about real estate, because they never did. I found it on my own. I co-produced a few low independent films in my 20s, and that's what got me out to Los Angeles. You know, I was looking for my first home. A baby was on the way. And I always looked at it as not my forever home like our parents did. I looked at it as an investment. You know, how, really rich people have tons of real estate. So how do I, this is my first foray into it. And how do I take this with no money down? I'm in debt. How do I buy this house and turn it into gold? And we did. We bought a house. We opened up the kitchen. I converted the garage into an office for my business. I knew I was going to get $700 of rent a month, and that was going to help me pay the monthly mortgage bill. And over time, it grew in value. And then we're kind of looking, where my kids were going to public school in LA, and it's hit and miss. And so we were looking at like middle school, high school, and eventually moved down to Manhattan Beach. And I'd rather invest in a house versus private school, and bought a house down here at 2011, which was a great time to buy. Eventually turned that into a rental and moved down the street. And that worked out really well. Eventually sold that, and I was looking at, small things, 4-unit, 8-unit. And I thought, building a resume by myself was a way to go. And eventually I sold a business at the end of 2016 and got into real estate full time. I didn't want to kind of half-ass it. And so I had some money to play with. I had some time, and, went to a lot of conferences and realized teaming up with others was the way to go. And so we did that. We bought our first property was a 42-unit, $1.65 million. And, then we kind of grew from there. We went to a $15 million deal, and so on and so forth. But first off, I should have bought the whole friggin' block and neighborhood for 42 units at 1.65 million. But whenever you get in, it's better than tomorrow. Buy today and keep learning, keep investing in yourself. And I applied the skills that I learned from being an entrepreneur and other things, that creative side, that business side, and applied it to real estate. And it was a great fit.
Yeah, absolutely. I love that story. I think all of us wish we could go back and buy up the block back whenever we started buying,
Yeah.
because it certainly would be, you can always invest in hindsight though, but that's awesome. Yeah, it's fascinating because so many people, there's the old adage, 90% of millionaires were made through real estate, but nobody really talked about it until, probably the last 10 years in terms of it really being a key part of a portfolio, or even, the main portion of a portfolio. So, it was always kind of get the job and that whole thing. So, your main focus is, as we kind of alluded there in the intro, is asset management. What stuck out to you about that portion of the business?
Because I've been running businesses my whole life, even in high school. So it was a natural fit for me. I was looking for my strength, and being able to work with vendors, being able to hold people accountable, follow a business plan, come up with a business plan and execute it, and have accountability. And now I wasn't always good at it in the beginning, and you always still get better and better and better, and learn from other people too. But that was a strength of mine. So I was focusing on my strength, and so that's where I was. My main contribution to syndications was focusing on that asset management piece. And also then I started a podcast and interviewing people that I wanted to learn from, and that I was intrigued. And so that only strengthened, my abilities as well.
Awesome. I love that. Yeah, it's that's what really makes a key, partnerships and ultimately growing a business, is everybody understanding their strengths, and then, kind of staying in that lane and trusting everybody to do what they're supposed to. And asset management is such a huge factor, especially now moving forward with the economic landscape we're headed to. It's going to be so important to, properly implement these strategies when we acquire properties. So talk about some of the keys, for that process and getting that implementation strategy.
Yeah. Like you said, now more than ever, asset management is key. And it's not rocket science. People can easily learn it. It's not, you certainly can go to school and learn this. It's not, you don't need to be a rocket science. If you break it down, it's actually pretty simple. You've got to measure everything. And so what gets measured gets managed. And then you could see, you could break everything down too when you measure it. So if you don't look at vacancy as a whole, break it down per unit. And so then you could figure out maybe 4 out of the 5 unit types are 100% occupied, so you can raise those rents. And the one unit type that isn't doing well, then figure it out. Is it in a bad location? Excuse me. Whatever it is, maybe you reduce that rent even $10, $20. But you can, if you keep measuring things, you could, it leads to much better decision making. Unit turns, everything. Break everything down to the process and see where those bottlenecks are. And then accountability. We use Google Docs for our weekly reports with our property management company. And so if there's things that we're looking to do, or assignments, we put everyone's name down, who's in charge of that, when it's due, any other particulars. And so each week we go back through that list of to-dos, and if you're on it and you haven't done it, you look foolish. So people forget, people write on notes. I get it. I do the same thing. So having it on a Google Doc that we can all go to at any time. I don't care if it's, an hour before the meeting, as long as you get it done, like it's right there. So we use Google Docs a lot, and not being afraid of having those hard conversations when someone isn't getting the job done, and figuring out how you can help them, any changes that need to be made. But and if they're consistently not getting it done, then you need to move on. and not be afraid of that. We've had to replace property managers, property management companies, regional managers, and it's not an easy decision, but something that is necessary. Even if the person is nice. I mean, we've hesitated when like, we really like this person, but it's like, okay, it's a business,
Yeah,
Um,
absolutely.
yeah. And then the last one, geez, I'm forgetting my measure, accountability, and my P. I'm zoning out, but like I said, these things aren't that difficult if you're just laying it all out and following through. We secret shop our properties all the time to make sure they're doing the right things. I'll stop by at our properties unannounced all the time. Friday afternoon, hey, I'd rather be at a bar hanging out with my friends having a drink, but I'm going to stop in on my properties and make sure they're there, they're doing their work, everything is getting done. These are the things that you have to do. Check out your property at night, make sure it's well lit and it's quiet. And so all these, trash is picked up and all these things that you expect to happen. And the only way to do it is by spot checking your properties.
Absolutely. I love that. That kind of strategy there, spot checking, secret shopping. I've heard of, a lot of operators doing that as well. Make sure, things are being done correctly. And we do have someone on site on Friday afternoon, despite wanting to go to the bar with our friends. So are you guys in the California market then? Is that your primary?
We don't, we're not very very tenant friendly. We invest typically in Phoenix and Tucson where it's very landlord friendly. So yeah, I mean, I have two of my employees live in Phoenix, so they can get there, or I'll take an hour flight and I'm there. And the beauty of being in a couple of markets is that we are always looking at new properties and checking on our own properties. It's not like we're chasing deals all over the place. We have great broker relations. We have you mentioned earlier, like lots of data points because we've been focused for years in that, and so we can make more informed decisions when we get an off-market deal or something something comes on market, and we can make a faster decision. Maybe try to take it down before it goes to full market.
Yeah, absolutely. And you guys are obviously in probably the hottest. Well, Phoenix, I think, is probably the hottest market in the country right now. A lot of well-established operators there. Back in 2016, what stuck out about it for you guys? Obviously, I think the growth was pretty steady back then as well. Well, I know it was, but nothing like it is now. So did you kind of have some foresight? Was there a little bit of luck with that, or what was kind of the decision there?
We love the population growth, the job diversity. It was very business friendly. It kind of changed because they got hit hard at the end of when the recession, and we saw what was happening. Now, when we bought our first deal, we probably when we were looking to partner up with some other people, because we went from 1.65 million to 15 million. I mean, we must have had 20 no's, from partners, and thought our underwriting was crazy. I think we had a 5.75 reversion there. We ended up selling it below 4. But other partners came on and said, we love your underwriting is way too conservative, like you're crazy. This is a great deal. And that's what we thought. It's only our second deal. We didn't have that as much confidence yet, but we really believed in what we were doing. And so it's just finding the right partners that believed in us. And certainly the market outperformed what we were expecting, but we thought we were in a good place. We thought the location was good, and it just took off. And yeah, we're selling deals under 2 years and just crazy returns. It's been phenomenal.
Awesome. I love that. Yeah, I just invested passively in a deal in Phoenix for pretty much the same reasons, right? Operators crushing the 5-year plan in 18 months, and kind of touch on. I think one of the biggest things now is Phoenix and Phoenix MSA is kind of learn from its mistake and set up infrastructure now so that when the next dip comes, if it's happening already, it's not going to crush them like it did in 08.
Yeah, when you have tremendous job growth, that's a great, cover up of any issues that you can have. Now, certainly you're paying a pretty penny in Phoenix, and I mean, even deals, there was one deal recently that the whisper was 20 million. I think like the best and final was like around 21.5. Then they kept going and going and going, and it closed at 26 million. Like it's just insane. And that's just one small deal. So it's been hard to find a deal. We last summer we bought garden office space that we're converting to multifamily. So our basis is incredible. But mostly I've been buying on Tucson, it drifts off Phoenix, which is great, but it doesn't have as high at the prices. Now, some people will say, hey, if you could buy the same cap rate or just slightly lower in Phoenix, why would you buy in Tucson? But my thesis has done well. Everyone's going to have different opinions, but Tucson's a great, it's the third, I think, lowest cost of living city in the US with great population growth. So those are data points that I love, and cover up any potential, downside that you can have,
Yeah, absolutely. And how far is Tucson from Phoenix?
The way I drive, hour and a half, what normal people 2 hours, I guess.
Fair enough. I love it. Yeah, I mean, I guess you've been in California long enough. That's what I appreciate about California drivers, though, is you make the move, right? There's no hesitation. It's like you see the opening and you take it, because if you hesitate, then you're going to miss it, or an accident's going to happen. So I always appreciate that about California driving.
Yeah, I think I was a race car driver in my previous life, or it's just something I really want to do at some point.
I love it. That's awesome. Yeah, and of course, it's a nice place to visit as well. So that doesn't hurt anytime you're an investor, which has kind of been a goal for mine as we start to determine more MSAs. Is like, where wouldn't I mind going and viewing properties and things like that as well. So we talked off camera a little bit about investor sentiment. It's kind of unsure. I mean, some investors are unsure right now for sure, and I guess good reason. Ultimately, they're kind of basing their decisions off the stock market, which you and I agree is kind of an outdated philosophy for determining where and what to invest in. So kind of talk about what you're seeing and things you guys are doing to combat that.
Yeah, definitely investor sentiment is they're very nervous, and real estate investing is very simple. It's we take your NOI and divide it by the cap rate, you get your value. It's not based off future 15x earnings in the future, or if someone makes a tweet about it, then it drops 25% in value. That doesn't happen. We can force appreciation as well. We can literally change the value ourselves by doing these certain things. So world of difference, tax benefits, leverage. It's such a no-brainer, and for people to get nervous about investing in real estate now because of the news cycle and stocks, this is the exact reason why they should be investing in real estate and passive income. To me, it's a no-brainer. Now, are there potentially rough seas ahead? Potentially, but a good operator is going to mitigate that by their underwriting and how they asset manage. And it's a long-term investment. It's not, I don't need to look at my property every single day and watch it go up and down and up and down. I know over 3 to 5 years, it's going to go up because of the levers that I'm doing to squeeze as much value out of this property as possible. And with inflation, if I could borrow even at 5% and inflation's at 8%, that's a 3% hedge. And my expenses are, let's say, 40%. So my income is making much more than my expenses are going up. So heck, this is a no-brainer, but that's my philosophy.
Yeah, and it's so hard, right? Because we're obviously biased and involved in it, and of course, it's so hard because sometimes you want to try to sell, right? Like, look at all these numbers. How could you disagree with this? But, ultimately, like I spoke with someone yesterday and he works for a broker dealer. So they just raise for all different deals. And he was saying how one of their investors doesn't want to invest in Phoenix because he's sure they're going to run out of water soon.
I do get that question a lot. But no, they are very well organized as far as that. They have, I don't know, like so many years of water underground. If you're outside the MSA, I think then like you have to be careful on your development because you have to buy water rights and whatnot. But within Phoenix, they're pretty good for the long haul. I think down the road, you have to take into account climate change and how it'll affect places like Miami, places like Phoenix, as far as drought in LA and whatnot. But that's pretty far off in the horizon. Certainly we should be doing stuff to mitigate climate change. But as far as a real estate investment, if your horizon is 5 years, 10 years, I feel that you're pretty safe.
Yeah, I think so. And if I understand correctly, isn't Intel moving a microprocessing manufacturer plant there as well, or building one there?
Yeah, I believe so. I mean, there's a lot of companies that continue to move into Phoenix, into Tucson. It's a very business friendly state. A lot of people are moving there from the West Coast, from Chicago. And some people will have two homes. They'll live there just because during the winter when it's much warmer, and then live somewhere else during the summer potentially because it does get hot there.
Yeah, it's I love that area. My family had a house in Scottsdale for a long time, so went down there a ton. And I'm not a good golfer, but I like to whack the ball around and drink beer. And it's nice when you can go down there in January and do just that. So I definitely understand that. So what are you seeing in terms of, you mentioned job growth and job stability. What industries are really focusing down there and starting to move down there?
Yeah, there's a good amount of tech that keeps moving down there. There's a lot of healthcare. There is so much industrial space too because they have to support it. So each new thing requires all these other supporting businesses as well, restaurants and service industry and whatnot. So it just keeps feeding off each other as well. Plus, tourism too is actually a big part. People go to Phoenix, they golf Scottsdale, they go to Sedona, and hiking is great there. So yeah, a lot of different industries are moving in there.
Awesome. I love it. Again, just strong economics, which really are setting it up to kind of withstand whatever comes this time, as opposed to what happened before, which is great to see them, set themselves up like that because, there's other cities that are going to get hurt again, because they're just not putting that infrastructure in place. So along those lines, what are they doing to set that up in terms of the infrastructure so that many people can move there and it can handle it and all of that?
Yeah, well, one, they made a conscious effort. I don't know when it was exactly, but to be much more business friendly, keep their taxes low. They've grown. The 101. They've expanded to other freeways. Whereas, I was just at a conference yesterday and we're talking about, let's say, like a Chicago, who they haven't invested in their infrastructure at all, and they can't because they don't have the money anymore. But then you've got these new cities like Phoenix, Charlotte, Raleigh, like these younger cities per se that have the money, have been investing in infrastructure, and that's where people are moving to, and moving out of cities that are they don't have the coffers, they can't invest in their infrastructure. So they are well behind the 8 ball, and they've got to figure out a way to make it business friendly, to make it easy for people to get around, to take a train to the airport or whatnot, so basic things that we take for granted that some cities just don't have, like LA, they're starting to build it now, but their public transportation is horrible, and that's why we have so much traffic. It was built for a very car friendly city, and that's been outdated for many decades.
Yeah, awesome. Really, really great point there. Great perspective. So as we kind of wrap up here, let's kind of, one thing I want to touch on with asset management that, you know, from that standpoint, asset management standpoint, with this, supply chain issue and in materials and things like that, what are some things from an asset management standpoint that you guys are doing to set yourself up? You mentioned obviously conservative underwriting and, that works in with the CapEx and all that, but, what are some things you guys are doing to set yourselves up with some of these supply chain issues?
Yeah, well, definitely in your budget, build in for, at least 10% increase in pricing, because, a lot of these bridge debt lenders, they'll hold you to those numbers. And certainly you might not get to all your CapEx, but you gotta be careful because prices will continue to rise. But by the time when you start underwriting it, you might not close for 3 months. By the time you get to it, could be 3 months, 6 months later. And so that's a huge gap, and it could have gone up quite a bit from there. You buy in bulk. We ordered brand new doors for a property we just took over about a month ago, and I forget the savings. It was like $10,000 if they just drop shipped it right to the property, and we just got a container to hold it, versus if they had to store it and then bring it to the property each time. We just made it easy for them and saved quite a bit of money for that. Order things well in advance too. Again, it could be a storage issue at times, but maybe if you don't have any extra space on the property and can't, don't have a space for a container, maybe your property management company, if not the vendor. Otherwise, you get a self-storage unit and store stuff there that you can have things ready to go, like your kits for your interior renovations. And you want that on the ready to go, because the quicker you can get it done, quicker you can get someone in there paying rent. So storage costs are relatively cheap, if you can, buy in bulk and get a savings. Every little bit helps. So, and other times we'll just order a different product if they don't have it. And we, I mean, like we've had problems with like hinges, like, it was like ridiculous. And it's just find another solution. That's what you got to do, and keep moving forward, keep getting things done and don't wait, while it's on a container for months. It's ridiculous.
Yeah, absolutely. That's great insight, and kind of having that foresight to understand that. And I think it's important too to know, like, identify what asset class you're going for, and like you guys being lean in terms of you're only in a few markets helps, so that now you know exactly what the assets look like when you take them over and how you want them to look. So now it's not like, oh, are we doing yellow or blue? Like, okay, this is how it's going to go. It's going to look like this. And so you can buy and store those materials, because it's kind of that rinse and repeat strategy.
Yep.
Awesome. Well, as we wind down here, I've got 5 questions I asked all of my guests. It's the final 5. First question, best advice you got from a mentor?
I guess, real estate is a team sport. Don't go it alone. Even we might have a team on a deal. If we encounter something that I'm not comfortable with, or I don't know, reach out to a friend, reach out to a peer in that network. It's a very sharing industry. So use your network. Don't go at it alone.
Awesome. I love that. What is it about your career that makes you feel like you're fulfilling your why?
Yeah, providing for my kids, and providing opportunities for friends and family too, to see the tremendous benefits of investing in real estate, and able to send my kids a private college and whatever they need. So yeah.
Awesome. I love that. That's great. Favorite non-real estate or investment related book?
Crucial Conversations, and it's great for personal relationships, for business, because I've read it a couple times, and we still have problems having those really tough conversations with people, and that really helps provide a good framework for that. So I definitely recommend that.
Awesome. I love that. I will definitely add that to the list. If you could have any superpower, what would it be?
Ooh, I guess the ability to see into the future, know what markets to invest in, and what sports teams to bet on, or
Well, I mean, you guys were pretty dang near had it getting into Phoenix in that
Yeah.
area when you did. So nailed that one for sure.
Yeah.
I love it. Cool. And last one, what's the best way for people to get a hold of you and learn more if they want?
Yeah, best way is head over to our website, breakofdaycapital.com, and you could sign up for our newsletter. You can the links to our podcast there on social media. So that's the best way. You can book a call with me as well.
Perfect. Gary, thank you so much for your time. Really appreciate it.
Yeah, thanks for having me. Love the time with you.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.